You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
The trading day doesn't start when the opening bell rings. Pros understand that risk never sleeps, and market-moving events happen around the clock. How can you arm yourself with the information you need to understand what's going on across the pond and how it can impact your portfolio? Welcome to the European Market Brief, your go-to source for information on the fast-moving European derivatives markets. Each episode brings you expert insights into the latest market trends, discussions of cutting-edge trading strategies, breakdowns of exciting new products, and analysis of thought-provoking trading activity. The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Euro STOXX, VSTOXX, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com. So join us as we shine a spotlight across the pond and explore the cross-border volatility, regulation, and innovation that makes the marketplace so fascinating. It's time to get the European Market Brief.
All right, everybody, welcome to episode 2 of the European Market Brief, the program where we dive deep into everything going on across the pond, as they say, in the world of European derivatives, and there's no shortage of things to talk about there, so I'm looking forward to it. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are listening these days. I'm going to give a quick thank you at the top of the show to all of the folks who took time to join us for episode 1. You never know in this environment. We've been doing this for a long time now, 18 plus years, so we have some data to go back on. But you never know when you add a new show to the mix exactly what the response will be. And I'm pleased to say over the past year, we've now launched 2 programs, the Futures Rundown and now the European Market Brief, and the response to both has been just overwhelming. So thank you to all of you who have taken the time to listen and join us on demand, whether it's on this podcast feed, the full network feed, however you get the show. We appreciate you all joining us here now for episode 2 of the European Market Brief. And let's see who else is joining me for episode 2. First, I am pleased to welcome on, making his inaugural appearance on the European Market Brief. He is the Joan Rivers to my Johnny Carson of the volatility markets. We know him around these parts as Dr. VIX, but today he's putting on his other hat as Dr. VSTOXX, aka Mr. Russell Rhoads, author extraordinaire, as well as moonlighting these days at Indiana University. Mr. Rhoads, welcome to your first appearance on the European Market Brief, sir.
Absolutely thrilled to be here, and you know that behind the scenes I've been poking and prodding the Option Insider Network to do something to focus on the European markets, because with and I'm going to break a rule right here they've got daily options that only trade over in Europe, but VSTOXX, which I think is a huge complement to VIX, and when we talk about volatility on vol views, I always slip VSTOXX in there when I'm seeing something that's going on relative to VIX. So I'm just bummed that you didn't have me on the first show.
Well, that was your own scheduling fault, not ours, sir. we can't make your schedule line up sometimes, sir. But you're right. You were a big impetus for the launching of this show. You've been whispering in our ears for ages, hey, we should talk more about European vol and European markets. And so lo and behold, the European Market Brief was born. But it's not just myself and Dr. VSTOXX. Today we are joined by two additional fun guests, two newcomers to the network, listeners. First off, we are joined by Damien Zinck, the Eurex Sales America lead. Mr. Damien, welcome to the European Market Brief, sir.
Thank you so much for having me. It's a big honor to join this panel. And just to introduce myself briefly, I'm based in Chicago. I cover asset managers, pension funds, insurance companies for Eurex. And I'm always excited to talk about Europe. Actually, even though I have been in Chicago for more than 20 years, I originally come from France. So I'm working for a German exchange. So looking forward to sharing some thoughts on Europe.
I thought I could detect a slight Chicago accent in there. So there we go. 20 years in Chicago. That's impressive. I'm surprised our paths haven't crossed before now, Damien, but better late than never, as they all say. And next up, we have another newcomer to the program and indeed to the network. He is Nick Cassano, the Director of Trading and Risk Management over there at Tradier. Nick, welcome to the European Market Brief, sir.
Thank you, Mark. I appreciate it. Super excited to be here with an amazing cast of characters. I've watched Mr. Rhoads' podcasts or videos online for a long time now, so excited to be here. I am a former option market maker who kind of found his way into retail trading firm. I too am from Chicago, and I am in charge of bringing Tradier brokerage and futures customers the best trading platforms and products that we can. So look forward to discussing the European markets and futures in general today with you guys.
And give us a quick hit at the top of the show for those of our listeners who are not familiar. What is Tradier? What do you folks do?
So Tradier is a retail brokerage firm who focuses on probably more option-centric customers. We have an amazing commission schedule and an API that folks can connect to and trade, create their own platform and trade through our API, execute trades through us. So it's an amazing company. You can check us out at Tradier.com for more information.
All right, listeners, now it's time to get the ball rolling with our Continental Conversation segment.
It's time to catch up with the thought leaders who are shaping the European derivatives markets. It's time to have Continental Conversations.
All right, everyone, welcome to the Continental Conversations. In our inaugural episode, we kind of explained a little bit about this show and also spend a lot of time talking about the current market tumult that is being driven by the trade war, the on again, off again. Is it over? I'll have to go check my Twitter feed for the latest development, but it's on again, it's off again. The trade war between the US and the rest of the world, including, of course, the Eurozone. So we thought for episode 2 here, we drill down into some more specifics, particularly on some of the products and some of the areas where you folks might actually want to trade this market tumult that is going on right now. Let's kick things off. A lot of you are familiar listeners with the broad market indices. A lot of you like to put your assets in the S&P 500 here in the US. And when you're looking at some additional benchmarks, some additional indices you might be intrigued at, especially if you're looking at the European markets, well then of course we come to our next product here on the program, the Euro STOXX 50. I could dive into it a little bit, but we have some great guests to help me do just that. So Damien, as our duly appointed Eurex representative, why don't we start with you, sir? Give our listeners a bit of an overview. What are we talking about? What is the Euro STOXX 50, sir?
So the Euro STOXX 50 is the most widely traded index as far as futures is concerned to get exposure to Europe. It is, as the name suggests, an index which has 50 constituents, which are the 50 largest capitalization in the Eurozone, and therefore the Euro STOXX 50 name. It has been for decades as I mentioned, the most traded, the most liquid product to get exposure to Europe. So in a way, it is the S&P 500 of Europe. And we can later discuss about other indices that might be relevant as well. But if you want to have the deepest, the most efficient, and the fastest product to get access to Europe, that's the Euro STOXX 50. And the constituents are some of the largest companies. You will find there, SAP, LVMH, BMW, these types of companies.
All right, yes, that is the Mag 7 of the Eurozone, if you will, out there, listeners. So if you're familiar with the S&P 500, obviously we're drilling down just 50 stocks here in the Euro STOXX 50. Mr. Rhoads, we'll get into all the vol fun in a minute when we get into VSTOXX and the entire vol segment. But looking out right now across the landscape of the Euro STOXX 50, what are some of your thoughts on it? And also, you spent a lot of time, obviously, looking at all things SPX. How does the Euro STOXX line up vis-a-vis a product a lot of people are familiar with in the SPX, sir?
I'm all about spread trading, and you know that I talk about spreading different ETFs against each other in the U.S., et cetera. And I do look at the relationship between the S&P 500 and the Euro STOXX 50. I don't put a whole lot of thought into there being 50 stocks versus 500 stocks, because even when you take the S&P 500, if you take the top 50 stocks, you basically have, hell, arbitrage firms will do a basket of just the top 50 in the S&P 500. So I think they are very comparable indices. The thing that always sticks in my mind with the Euro STOXX 50 versus the S&P 500 is I feel like there's more consumer discretionary exposure and a little bit less tech and more financials exposure in there. But I always have had this feeling that when you're thinking about an economic recovery, the Euro STOXX 50 and European stocks in general might be a better place to be than the S&P 500 during a economic recovery, just from a fundamental standpoint. And I do think that the Euro STOXX 50's got some catching up to do. I think it's been unduly suppressed just a little bit because there's a war at their doorstep. And maybe that is less than justified, but if they can start to calm that down a bit, I definitely think you want to be in the Euro STOXX 50 versus the S&P 500.
Go figure. A shooting war on your doorstep will tend to impact the markets.
You know how gloom and doom I am.
And then Mr. Nick, as our duly appointed boots on the ground broker representative on the show today. What are your thoughts, first off, on all things Euro STOXX? And then B, what are we looking at from a product perspective? What are your folks actually able to trade out there, sir?
Yeah, so I mean, I love that we have access to trade the Euro stocks, as Mr. Rhoads had kind of noted, right? Like, there's opportunities sometimes that present themselves in foreign markets that we don't necessarily see here in the U.S. I'm sure, I don't have it in front of me, but I'm sure historically they're correlated, but I'm sure there's divergences over time, and divergences always create opportunity for traders. And what we see here at Tradier is our customers are trading, a lot of the Eurex products, but two in general are the STOXX 50, both the large contract and then the micro, and then also the DAX futures are very popular here as well. Some of our folks even trade some of the fixed income products that they offer as well, the 10, 5, and 2 year. I'm going to call them notes, which is probably incorrect, but you get the point. The bonds, the European bonds. So.
Damien, let's get into some of those products a little bit as well. Nick just broke down a couple for us. He also said the magic word, which are the smaller, the bite-sized contracts that everyone is so obsessed with right now. We have the Euro STOXX 50. He also mentioned the DAX. Give us a quick overview of that as well. What are we talking about? And then what are we talking about in terms of tradable products for both? What do we have available in our trading arsenal, sir?
We to talk about the DAX. So the DAX is the index for Germany, which is listed at Eurex as well as the Euro STOXX, and indeed the Euro STOXX 50 futures and the DAX futures are the most traded equity index products at Eurex, and they are available as regular contract. On the DAX side, sometimes we call the regular DAX the big DAX, because it now has a notional value which is pretty substantial. One contract currently controls about 600,000 euros, which is a very large size, and which is the reason why we also launched a mini DAX, which is 5 times smaller. So the multiplier is 5 times smaller, which means that the notional per contract is about 120,000 euros. And then we also launched the micro DAX, which is again 5 times smaller, therefore around 25,000 euros. And the same thing can be said on the Euro STOXX side, where the regular contract has currently a notional value per contract of about 53,000 euros, but we launched there as well a micro contract, which is 10 times smaller. So very liquid product and available in different sizes depending on the type of trades that you want to implement.
And Nick, you mentioned there's a lot of attraction to these products over there on your platform. Give us a quick glimpse. Who's trading these things and what are they up to? Or is it very analogous to what we see in a lot of traditional U.S. equity indices, the same use cases? Are we seeing unique use cases? What are folks up to in these products?
I think for the most part, folks are utilizing it in similar to how they would trade a U.S. based indice, but are trying to capitalize on market movement in Europe. The thing about it is, like, if you're in the U.S. equity market, right, and you trade FEZ, let's say, which is the ETF equivalent of the STOXX 50, Damien just noted that the contract value is about 53,000 euros. I think the euro's trading about 114 today, so let's call it 61 grand approximately of notional value that big STOXX 50 contract controls. So, if you bought the same amount of FEZ in a day trade account in a U.S. equity market, you'd have to put up 15,000-ish, these are ish numbers, 15,000-ish of capital to control that position. Conversely, if you're day trading in a futures account, with $1,000 day margins, right, you can get, you're only putting up $1,000 of capital and you can get an intense amount of leverage. And so I think folks are attracted to the leverage that they can get in the futures market in Europe. You can get this leverage in the US. You can get the leverage by using these European products, and so that's kind of what attracts them. Obviously, leverage can enhance gains, but also amplify losses. You should have a good exit strategy and be aware of what you're doing. But I think that's why folks are gravitating towards these products, because it gives them the opportunity to get more leverage on their intraday trades. That's my thought.
Yeah, it is fascinating to see that. I mentioned we launched another new program last year as well, the Futures Rundown. It's just been interesting to me to see just how much evolution has gone on the margin front in the future space in the last 5 or 10 years, and how competitive, especially as you mentioned, that intraday margin scene is right now. And people can really get a lot of exposure on the futures market with not a lot of capital, which may surprise some folks who maybe they haven't touched futures in a long time, or they've always been intimidated. They thought they needed a large account, and there were a lot of barriers to entry. Seems like a lot of those barriers to entry, Nick, have fallen by the wayside. And as you pointed out, you could do a lot with not as much capital as you might think, Nick.
Yeah, no, it's true. And I just referenced the big contract, right? Like if you look at the micro, which is a tenth the size, you're talking about someone with as little as a couple $100 in their account can control 5 to 10 grand of notional value, which is unheard of in the equity space. And really give folks a chance to test some of their strategies and not risk a lot of capital. It's amazing what has been brought to the retail investor over the past decade.
Well, speaking of things that have been brought to all investors, let's go out to the land of vol now, listeners. And that's where we're talking VSTOXX. Like we said, we asked Dr. Vix to put on his VSTOXX hat. What the heck are we talking about? What is VSTOXX? Well, you're familiar, of course, with the S&P 500 and its volatility derivative, aka VIX, which is effectively the 30-day at-the-money volatility. The SPX with a few bells and whistles thrown in. If you don't understand any of that, make sure you check out our Volatility Views program, where we've gone into the machinations of VIX very deeply over the past decade plus on that program. So make sure you're checking it out. But VSTOXX, analogous in some ways, but also different in other ways. Obviously, we're talking about a different underlying index to start. Of course, we're talking about the STOXX 50, a different sample size to start with, and then the methodology is a little bit different as well. So Mr. Dr. VSTOXX, sir, if you could put on that hat, sir, tell our folks a little bit about VSTOXX. What is it? How does it shape up versus VIX? And what are some of the nuances in the calculation that may interest them?
Now, if I say everything that I want to say, we're going to be done. I could spend 35 minutes on
That'll be the full hour right there.
Yeah, you often joke, you go, you've got all the time you want. You don't want me to do that. So VSTOXX, it's the European Volatility Index. I think that's that's just the way to refer to it. The big differences that I think everybody is aware of is there are different markets, etc. The calculation is slightly different. It uses what I would refer to as the previous iteration on VIX. And if you recall, I think when I was still at SIBO, because I had to go out and explain this to a lot of people that were upset about it, but they changed the option expirations that feed into VIX to just before and just after the Friday just before and the Friday just after the 30-day. I think Eurex may get to the point where they could do that, but I also have looked at, did that really have an impact on VIX when they switched from the third Friday before and the third Friday after the 30-day? And not really. It hasn't had that much of a material impact. So I don't think that calculation difference should have any impact on anybody's minds. When you compare VIX and VSTOXX, VSTOXX is generally at a premium relative to VIX. I think about 80% of trading days going back to 2000, VSTOXX closed at a premium to VIX. That has not been the case for some time. They've kind of flipped spots, and VSTOXX VSTOXX has been at a premium to VIX for a while, and flipped to a extreme premium and flipped to a discount. And I feel like that extreme premium was part of the what was going on with respect to extra concerns with respect to Europe. But the relationship between the two, I often take a look at and why the data that I cite might be a bit different than other people. I take 10:30 Eastern time as the close for VSTOXX and the close for VIX each day, and the close for the futures as well, to get an apples to apples comparison of the two markets. I feel like the US markets calm down a bit, so you don't have all that open noise. And I spread trade these two things against each other pretty frequently based on how much they widen out or narrow using the front month futures versus each other. On a pretty regular basis. And then the thing that I feel like gets lost in some of the noise, and when there's so much that people are paying attention to when we get what I refer to as volatility events. But VSTOXX has, when we get a volatility event, and my friends down the street at SIBO always want to fight me on this one, but it's true, VSTOXX is more reactive. It truly is. And I know that it is because, I'll talk about this when we talk about trades as well, but I back tested selling an at the money call every month, and then using that premium to buy two out of the money calls. So, putting on a 1x2 and holding it to expiration for both VIX and VSTOXX and covered about a 10-year period. That doesn't work for VIX. It works for VSTOXX, and it's because of the reaction that you get to the upside. It's because you make more on the upside with that one than you do if you consistently do that with VIX. And that is a consistent way, and I see people trade this still, because I wrote a paper about it a while back. But I think that's a very common use of VSTOXX options. And it's something that works in VSTOXX that doesn't work in VIX.
Yeah, I mean, how many times do we talk about on vol views people trying to find that magical way to put trades onto the upside and stay in for the long haul? That 1x2 is very popular, and you're right, it doesn't even usually pay off.
And if VSTOXX doesn't move at all, because I'm using the at the money option relative to the index, not relative to the future, you get a bit more juice from that. Typically, you get a lot of those trades that expire out of the money, but you're getting paid just a little bit to have insurance.
Yeah, that's fascinating. And it should make structural sense when you think about it, listeners. We are talking about a smaller index, 50 versus 500. So if you think about the analogy in terms of just number of constituents, they're going to be more volatile. Smaller sample size should equate to a little bit more vol, which is also what makes what Russell just said about the fact that now we are seeing VIX at a premium to VSTOXX. Also very interesting. That definitely makes my ears perk up and make me want to look at some interesting trading options and activity out there. Damien, since we're talking about what's available to trade out there, let's talk about that a little bit. What products do we have in our arsenal? What can we actually trade if we want to trade some European volatility, sir?
You can trade the VSTOXX futures that we're talking about. You can also trade options on VSTOXX, actually options on the VSTOXX futures. So those two products are available for U.S. investors. They are CFTC approved, as we say, and they can be traded. So the VSTOXX futures can be traded all day during U.S. hours until the close of the U.S. market, so until 4 p.m. Eastern time, New York time. And they open actually at 7:10 p.m. in the evening until the next day, 4 p.m. The options on VSTOXX futures can be traded from 2:50 a.m. for those who like to start trading early, New York time, until 11:30 New York time. So this is the European close. For the moment, this is the time when those products are open for trading.
Damien, you don't start all your trading at 2:50 a.m. What's wrong with you? I do all my best trading between 2:50 and 3 a.m. That's my.
I know. I'm missing out on something here. Yeah.
As you mentioning hours, I realized we didn't hit on the hours for Euro STOXX as well. So really quickly, what hours do we have for the Euro STOXX futures?
For the Euro STOXX futures, the hours are the same as for the VSTOXX futures, meaning they're available all day until the US close at 4 p.m. and they open again at 7:10 p.m. until the next day, 4 p.m. Those are all New York times. Same thing for the DAX as well, all the DAX futures.
And Nick, as our boots on the ground guy here on the show today, what are your thoughts on VSTOXX versus VIX? Everyone's probably heard of VIX. Some people are kind of newer to the VSTOXX side. So if you have any thoughts there on these two products, how they compare, how they differ. And then also, what are you seeing? You said you see a lot of interest in the European side over there at Tradier. Are you seeing any interest in VSTOXX? And if so, what are you seeing? What are folks up to?
Yeah, so the interest in VSTOXX is I think it's a newer product or new to our customer base, and so we're seeing some folks trading in it, maybe migrating from VIX when there's opportunities to trade it. So it's not we're not seeing a ton of volume yet, but I am seeing a migration. I do expect over time for this to be a product that a lot more folks are trading here at Tradier on the retail front.
Well, since we're talking about trading activity, that means it's time to dive into the overnight desk.
What's lighting up the tape in the European derivatives markets right now? Let's find out. It's time to check in with the overnight desk.
All right, welcome to our inaugural overnight desk segment, listeners. Yes, we didn't have a chance to get to this on our first episode of the European Market Brief, but now I want to take an opportunity to dive into some of the wild fluctuations we're seeing out there in the market and some of the interesting trading activity we're seeing as a result. Let's go around the horn. Maybe Mr. Nick, we'll start with you. We'll go backwards. Obviously, these are wild times in the market. As I said up at the top of the show, we have the trade war. It's on again. It's off again. We hate Europe. We like Europe. Every tweet has something different in it these days. So these are very tumultuous, to put it mildly, very tumultuous markets that we're all living through. It's also making for a little bit of vol out there, which again, going back to what Russell was saying, makes it so interesting to see VSTOXX at an actual discount to VIX right now. Again, you don't see that very often, listeners, so that also is maybe yet another reason if you were on the sidelines or at least not quite paying attention to these markets, you might want to sit up and start paying attention. So, Nick, we'll start with you. What are your thoughts on these absolutely tumultuous markets we've all been living through for the last couple of months? And anything interesting you're seeing in terms of the impacts out there on the European side from this trade war or the myriad geopolitical goings on over there in Europe? As well, have at it, sir.
Yeah, so I mean, obviously, the elephant in the room is the trade war, the on again, off again trade war. We have been seeing a lot more activity from our day traders, just because of there's no better time to trade a market if you're a day trader than when it's insanely volatile like it was over the past, I don't know, 6 to 8 weeks. Obviously, slowing down a little bit here recently. And I still think that there's going to be a lot of volatility to come, right? Like historically, 19% vols are still good trading environments. It's not 50 or 80%, but it's a hell of a lot better than 12%. So, I expect that there's still to be good trade. I also, aside from earnings of the big companies, I do believe there's a couple of elections coming up. Believe in Poland and Portugal that could impact the direction of the Euro stocks. I think there's some political turbulence in those two countries and maybe a changing of the guard to a more right-winged government. And so I think there's going to be a lot of opportunities in the European markets this summer. In Euro STOXX 50 futures are a great way to access that volatility.
And Damien, same question for you, sir. What are your thoughts on these absolutely tumultuous markets we've all been living through collectively, hopefully keeping your head above water, hopefully making a little bit of money? As Nick said, they are good trading markets, but not for the timid out there at the end of the day. And what are your thoughts as well on how these various drivers we're seeing, whether it's the trade war, whether it's geopolitics, whether it's how earnings play out on the European front, how all these various drivers are impacting the European market right now, sir?
We have seen a lot and growing again interest for Europe in the past few months because of the tariff wars and other factors such as the evolution of the situation in the Ukraine. And we have clients who have shown a desire and they started increasing their allocation to Europe. I think there's a phenomenon where they realize that they are heavily invested in the US and they want to revisit this allocation and maybe putting less of their eggs in one basket. So increase in interest in Europe just to diversify away from the US. It has, on the volatility side, definitely the arguments that we like to make at Eurex is that you need to look at volatility on a regional basis, that there's not just one volatility around the world. And even though the VIX is a great tool to access volatility, you should look at volatility also in Europe or in Asia. And as Russell mentioned, the spread between VIX and VSTOXX, which tends to be, as we mentioned, and you mentioned that, Mark, as well, at a premium for VSTOXX, has been all over the place in the past few months, which shows that there are opportunities if you look at the difference between regions. And overall, the outlook, I would argue, I'm not an economist, but is rather positive for Europe, at least as a way to diversify away from the US. There are plans in Europe to increase spending, which should be good for the economy, whether it's Germany, which seems to be ready to spend more for its economy, or if it's the defense sector across the board in Europe. Maybe if we get closer to a resolution in Ukraine, that might also boost the European market. So definitely a closer interest and a lot of investors taking a closer look at Europe at the moment.
And Mr. Rhoads, the last word is yours, sir. Obviously, very tumultuous markets. You and I have been talking about them week after week on Volatility Views. So if you want Mr. Rhoads' weekly thoughts, go check out that show, of course. But Mr. Rhoads, we're looking at it through the European lens here right now. What is catching your eye on the European equity and vol scene and all these different drivers we're talking about, whether it's geopolitical, whether, of course, it's the trade war, or also the, shall we say, somewhat unique European earnings scene? Have at it, sir.
Well, I'm first off, I'm going to apologize to the Eurex people because I keep throwing other exchange names in there, but I think it gives people in the U.S. a perspective on what I'm talking about. When I'm on TWIFO with you, I started talking about. And TWIFO is the CME's, the options on futures program. I started getting all excited about the industry-focused futures that they were doing, that they were kind of putting out futures that focus on the 11 sectors of the S&P 500. And I always like trading those ETFs against each other. And now you have the chance to trade futures. Well, Eurex is one of the most active futures contracts at Eurex is the bank's future. And it's up almost 38% this year, whereas the regular index is up around 9% or so. And you never want to step in front of something that's up like that. But you got to assume at some point those two are going to narrow back together. So I haven't done the historical work to see where that stands within history, but I just can't imagine that a 30. What would that come to? 28% difference between the two in less than 5 months is something that's normal and not going to revert back at some point.
Yeah, that's pretty wild. And Damien, that brings up an interesting point too. We got so excited over there with stocks and VSTOXX. We didn't get a chance to dive into the sectors, but that's obviously, as Russell points out, a hot trade over here in the U.S. A lot of people love to play individual sectors, whether it's the financials, whether it's energy, whether it's healthcare, whether it's tech. There are a lot of different ways to carve up these underlying indices. Russell just pointed out to the financial side. What are some of the sectors we could trade out there in Euro STOXX land? And are you seeing any interesting trades going up right now, sir?
Yes, there is equally as in the US, there is availability of sector futures for Europe. Some of the sector futures are based on the Euro STOXX 50 index, and that's the case for the one that Russell mentioned, which is an extremely active. Not only did it outperform the Euro STOXX 50 year to date, but it is also in general a very actively traded contract. So I would say if you want to look at one sector where there is action, where there is volatility, that's the one I would start with. So Euro STOXX 50 banks futures. Other sectors are available as well, such as utilities, industrial goods, insurance, construction, etc. So and semiconductor, I would mention one that has gotten traction as well. So the most traded this year were utilities, the banks one, of course, real estate as well, and industrial goods in that order. And so definitely, and I just read this morning that in the tariff war, Trump is looking potentially, because of the legal situation about being able to implement tariffs on general countries, that he might be looking more at sectors. So definitely something that is worth monitoring, I think, at the moment.
And Nick, we'll turn to you now. Like I said, you're our boots on the ground representative out there. You mentioned you're seeing a lot of interest in the futures over there on the European side. Any interesting trading activity lighting up your docket right now in light of all this tumult and this volatility we were just talking about?
Yeah, as I said before, I think folks are chasing the volatility, the action. Anytime a index is up 38% a year, it's going to attract traders, right? Because there is opportunity. And the great thing about these Eurex products is that they're very liquid too. So you're trading a liquid market, and you have an opportunity to get in and out of your trades without very much slippage. So I think our traders on the retail side are just following the volatility and getting into products where the market's moving in a dynamic way each and every day.
And Nick, I had a chance to talk to some of your compatriots from Tradier down at the OIC conference. I'm not sure if that's hit our network already, listeners. Some of our pro members may already have heard that. It hasn't hit the full network, I don't believe yet, but I'll have to check by the time this airs. You probably will have a chance to hear it. If not, stay tuned to the onslaught of OIC coverage that is coming to the network, listeners. Every day we have new panels and new conversations hitting the network. It's an embarrassment of riches. But one of those episodes, Nick, I sat down with your compatriots down there at Tradier, and they were talking about this exact topic, about some of the interesting market tumult we've seen out there this year and how that's impacted the Tradier customer base. You folks tend to cater to a little bit more active clientele. They're trading a variety of things, could be zero day, could be VIX or VSTOXX, whatever the case may be. They were very active, but also for a period there in April, these markets got to the point where I tend to refer to them as take your ball and go home markets. When VIX is sustained over 30, VSTOXX sustained over, let's say, 35 or 40, those are markets where even the pros sometimes like to take a step back and say, wait a minute, what is going on? I know a lot of your audience is into a lot of the very near-dated premium harvesting. That's obviously a very difficult trade to do when we're whipsawing 100, 150 handles in the underlying at any given day, sometimes multiple times a day. Have you seen a return from some of that activity now that we've seen, let's say, vol not quite get quiet again, but retreating off of, let's say, those take your ball and go home high levels? And have you seen that play out on some of the European products as well?
Yeah, that's a great point, Mark. Our customers are, I would never stereotype any customer, but more or less they like to be play that premium harvesting game, zero DTE, defined risk spreads, whether that be an iron condor, or if they have a directional play, they might sell a put spread or sell out of the money call spread and just try to enter a high probability trade that they can collect some premium on. Obviously, when markets are moving 5% a day, that becomes a very challenging trade. And so they do calm down. But recently with the slowdown, we have been seeing customers re-enter that trade. And a 19 vol is a great time to put on that kind of trade, right? Like it gives you a lot more buffer, a lot more room for error in your strategy. And so, yeah, we have seen folks flocking back on the equity side and on the futures option side as well, where futures options are available, of course. So yeah, we are definitely excited to see that our customers have kind of braved the original storm and are back, trading the way that they want to trade.
Gets back to what you're saying at the top of the show. You're right. 19 vol is a great entry point. It's spicy enough to be worth your while, but not too spicy to say maybe I don't want to play anymore.
So,
Right.
so it's a
great entry point. And we are starting to come up against it, but I want to talk a little bit of VSTOXX trading activity as well, because as Russell was alluding earlier, it's interesting to see this very popular trading strategy in the vol space. In fact, I'd argue we see it more in the vol space than just about anywhere else, maybe with the exception of a couple of commodity-based futures options that have some bias to the upside. We really don't see a ton of the 1x2s outside of the vol space. That seems to be where the 1x2 tends to live, because if you think about it, listeners, these vol products are all designed to potentially capture that big move to the upside of vol spikes, and people want to be in there when that happens. But as Russell alluded to, it's a challenge to make that pay off over time, and in VIX it tends not to. But Mr. Rhoads, as you were saying, the 1x2 tends to perform a little bit differently out there in VSTOXX land, and it seems like you've found a few more of those going up right now, sir. What's catching your eye?
Found one of the trades that I think you and I get very excited about with respect to having some long volatility exposure and having it not cost a whole lot. Somebody yesterday, when VSTOXX was at 2010, they sold 1,000 of the June 23 calls for $1.05 and bought twice as many of the 35 calls for 32.5 cents. Took in a credit of 40 cents, so they're okay as long as we stay below 23. They're really looking for to get this to pay off to the upside. You're looking at 50s, 60s. in VSTOXX. Now, that's not saying if we get a move to 35 or something like that, closer, yeah, and we're not at expiration yet, there you can probably monetize it or trade around it as well. But I mean, like I said, when I do these, I like to sell something that's closer to at the money for the call. And if they had done that, they would have been able to buy, a lower strike as well. And then I came up with one of those short put long call spread trades using August. And somebody sold 2,000 of the 16 calls. I'm sorry, 16 puts. The 16 puts, they sold the puts to buy the call spread. They bought the August 24 calls and sold the August 29 calls. I really like all of those strikes because, volatility spike gets you into the 30s, and that gives you a good chance to monetize all of that. They did that at a cost of a whopping 5 cents, which we do refer to parts of euros as cents, just like we do parts of dollars in the US. So I'm not using the wrong term. Like when I go to a European soccer match and I call it a game, so I'm better with the terminology.
Did you watch Ted Lasso, sir? We all learned not to call it that from Ted Lasso.
Dude, when I'm over there talking volatility, they call me the Ted Lasso of volatility over there.
Are you confused by the pitch size? Is that what throws you off out there, sir? All right, listeners, speaking of throwing us off, let's see if you can do that with a little bit of the old red phone.
What's on your mind as you're navigating the wild world of European derivatives? Let's find out as we answer the red phone.
All right, listeners, welcome to the red phone segment, another new segment here on the show. We didn't have a chance to get to listener feedback, obviously, because it was our first episode last time, but I'm pleased to see so many of you have already enjoyed and reached out about episode 1. If you want to engage with the show, listeners, a lot of different ways you can do that. You can reach out to us at Options on most social media platforms. That should work. Questions at theoptionsinsider.com also works, of course, if you're part of the pro, theoptionsinsider.com/pro. You could join us live and comment as well, just like a lot of our pro members are doing right now. Loving the show. Nichols saying this is fascinating. Option Queen, very insightful. So yes, thank you. Thank you for all of you who took the time to join us live out there today. And also thank you to everyone who reached out after the fact, just like I'm going to say this is Ezekiel, let's go with. Ezekiel says, I'm a new subscriber to the European Market Brief, and I just wanted to drop the host a line to thank him for this content. Well, thank you. I've been a long-time trader of these markets, and I have always wanted a show focused on markets from across the pond. Well, you could clearly see that you've been listening, Ezekiel, because you went with our across the pond terminology. But thank you for that. We appreciate you and everyone else who took the time to listen and, of course, to reach out in this case. And we'll have a lot more coming for you on future episodes of the European Market Brief. Unfortunately, that music means we're out of time for this episode, listeners. But I want to thank everyone who took the time out there to join us today. And before we go, let's go around the horn. Let's see what everyone has cooking to see what you might be interested in if you want to learn more about these markets or potentially to trade them yourselves. Damien, we'll start with you, sir. If folks are interested in these products we're talking about and they want to learn more, where should they go? What should they do, sir?
They can go to our website, which is eurex.com. We have a volatility section where they will find all the information they may need to trade VSTOXX futures and options with all the product characteristics, and then talk to their broker and hopefully be able to join the trading of those products, whether it's VSTOXX futures and options or Euro STOXX 50 or DAX futures as well.
And Nick, if folks want to kick the tires on any of these products we've been talking about or something else over there at Tradier, where should they go? What should they do, sir?
Mark, first of all, I just want to say thank you so much. This was great. You guys are awesome. They can go to Tradier.com for more information. That's TRADIER.com. If they have more specific questions, they can reach out to service@TradierFutures.com. and connect with one of our specialists. We have, 30, 40 years of futures experience on our team that can answer all of your questions, concerns, help you if you're new to the game, learn a little bit about how it works and all that. And lastly, if you're more of a phone call person in this day and age, you can call us at 980-247-1400. So thank you so much again, and I really do appreciate this opportunity.
We're glad to have you on. And of course, Mr. Rhoads, if folks want to follow along with your Substack or any of your content you have out there on the European vol side, where should they go? What should they do?
Everything I do, I'll put it out on Twitter, and my Twitter is at my full name, Russell, Rhoads. Don't misspell that last name. I am not the DUI getting weatherman in Tampa. That's not me.
So you claim.
It's not me, man. Trust me. If I were a weatherman in Tampa, I'd be living large. But coming up, there are a couple of systematic approaches that I've written up in the past that deserve an update. So keep an eye on my Substack. The 1x2 thing that I talked about, I haven't updated the data on that about 9 months or so. And I was waiting until volatility calmed down. I wanted to see how it worked through the last through our last little volatility spikes. And then something we did not talk about, but maybe you'll let me come back and talk about, consistently shorting VSTOXX futures into expiration. I got a couple of decent systematic ways to go about doing that. They're different than the approaches for VIX. So, and they also, if you do both of them, you actually get some diversification benefits, because sometimes one works and sometimes the other works. So you'll see when I'm doing those things on my Substack and on Twitter as well. And I might do a webcast around them as a third thing. Maybe we'll do a European only pro. You like how I make you do things sometimes?
Look at you, you're laying.
We can do a European pro, and I can talk about both those systems.
There you go. He's a smart guest, listeners. He's laying the groundwork for future appearances already, listeners. So stay tuned for that. There will be many more episodes to come, Mr. Rhoads, where we'll get into all that fun, shorting VSTOXX futures and a whole bunch of other fun. But that is going to do it for this episode of the European Market Brief. Thanks to everyone who's joining us on demand. Thanks for all your positive feedback. Glad to see you're enjoying the show. A little bit of a fun bonus for you folks on Thursday. I'll be back in about an hour with our usual Thursday lineup of the option block and This Week in Futures Options. And for the rest of you, we'll see you back here next time for the next episode of the European Market Brief. Stay safe out there, everybody.
The European Market Brief, brought to you by Eurex, is your trusted source for the latest insights on European trading and market trends. As the home of Euro STOXX, VSTOXX, DAX, and European rates derivatives like the Bund, Bobble, and Schatz, Eurex stands as the leading European derivatives exchange. Learn more about trading Eurex futures and options at www.eurex.com.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.